Luna, we're gonna talk about your favorite coin. Are you ready to talk about your favorite coin? Come on, Luna. Say something. Oh! There you go. It's your favorite coin, IOTA. Say hi to everybody. There you go. Give me one more howl. Oh! Now give me a long one. Oh! There you go. That's a good puppy. Okay, guys. She has spoken. She says that that's exactly what we are doing, guys. If she wants to talk about IOTA, the boss speaks pretty loudly, okay? Okay, so last time I did a technical analysis on this coin was actually a few days ago, and we're going to take a look at what is up. So this is obviously the first impulse leg up, right? This shot up like a rocket right there. Whoever got it on this short must have been really happy. Actually, I don't know if they're short, if they allowed a short yet there though. Yeah, I don't remember, okay? But we're gonna call that basically the first impulse wave up. And then we're gonna call this our A, B, C correction, okay? A, B, C, right there. That makes a really good correction. And here, when we zoom in closer, we see our first impulse wave up. It's kind of ugly the way this wave is. So we're going to draw it as best as we can to fit the criteria of Elliot Wave, okay? We're going to call this one 1. We're going to call this 2 right there. We're going to call this 3, 4, and 5. Now, the reason why it fits the criteria for Elliot Wave and we draw it as best as we can is because wave 3 usually is the longest wave, right? So it fits that criteria. And there are many, many waves of fractals within a big wave, right? So we can call them a subwave, we can call them a fractal. There are many different names for them. But it fits the general criteria of that wave 4 does not retrace to the territory of wave 1. And wave 1 is usually the shortest one. It's the shortest impulsive wave. And there are many, 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 many corrections inside of this 2 wave here, consolidating. And then obviously something very fundamental happened right here, I would imagine. Something huge happened, and there's probably news announced on August 1st, which shot up the price by a whopping, how much did that go up? I'm really curious now. 300%. If you had put in $10,000, you would have made $20,000 profit. You would have turned that $10,000 to $30,000, guys, within 14 days only. That is how high IOTA went up, okay? I didn't get in on that myself. I wasn't really focusing on that coin at that time. I was more focused on OMG Go, and that was actually even more profitable because I was playing it since 50 cents and it hit around $14, so can't complain about that. Anyways, so that is now our 5th wave going up there. Now, what is this big mess? Okay, guys, what is this huge mess going on? Okay, if we look at other coins, just as an example, ETP, right? If we look at ETP right now, what we can kind of see, don't mind my chart. My charts are very messy sometimes, but what we can find is kind of a general shape like that, right? There's always some sort of general shape like this going on. So for example, the shape could be something like this, right? You know, something like that, right? If you look at OMG Go, which is another big pick of mine right now. And by the way, I really wanted to thank this person for sending me an OMG Go coins as a tip. That was, when I woke up to that and I saw that on Luna's in Luna's piggy bank, I was like, wow, that was really nice of that person. So I just wanted to give you a big shout out there for doing that. You know who you are. You watch my videos. So thank you very, very much. Hopefully I'll never have to use it. So, okay, let's go look at OMG Go. On here, what do you guys notice about this other than a really ugly chart? Okay, what you guys notice other than a really ugly chart is that it kind of fits the same description, right? Where we have a pattern kind of like that going on here, and once it goes to there, something happens. Something always happens. Now we're gonna go back to over here, or sorry, not here, to IOTA. And this goes to every single coin, guys, where it's a very bullish market right now in general for cryptocurrencies, but it's in the consolidation phase right now. It doesn't mean it's in a bearish market. It means it's in a consolidation phase because a lot of new coins were, you know, added June, July, August or so, and it spiked up really high. And the first thing that we always try to make note of is, hey, what kind of pattern is this one kind of running right now? and we see that it's kind of running a very similar type of pattern, right? No doubt about that we all see this right here. It's in some sort of triangle formation. And then usually what happens is at the end of a breakout, it breaks out big. And that's why I wanted to touch up on it now, because it's very, very close to breaking out, guys, okay? And the way we drew this last time was with an A, B, C, D, and E correction, okay? So it starts from up here, and we'll call this A, and then B there, and C, D, and basically one of these ones or these ones are E, okay? And there's probably many different types of corrections, which I won't get into. They were covered in my previous videos, and sometimes it can be very difficult and time consuming to break down the fractals of subwaves. So I'll leave that to you guys. So we're gonna call this basically A, B, C, D, and E. And there was actually a massive breakout already a few days ago, okay? So actually I will draw it from right here, just like that. So what we noticed about the first thing is that it's forming some sort of, let's connect these points first of all, okay? Let's choose a nice color as well. Let's choose a good yellow color which contrasts the black background. Okay, so what we notice right now, other than everything else going on, okay? Other than all of this going on as well, so it broke out a few times, right? So what we do is we draw the most relevant resistance points, and then we notice that it kind of broke out of there already, right? A few times. And let's also draw a support right down over here, okay? Just to about right here, and that's what we originally saw first. Would you guys agree with me? Set everything aside, the A, B, C, D, and E, okay? We're gonna connect these points that we saw first. And then you guys will notice a breakout that happened, right? It's squeezed into this area, and of course, a breakout always happens. I'm gonna explain to you guys what this wedge is, okay? This is called a falling bullish wedge, okay? And this one here is called a rising bearish wedge. So one is bullish, one is bearish. And let's actually do a quick count. So when we actually do a count of here right now, of this one first, this is what we get. When we get an A, B, C, D, and E correction inside of there, it breaks out, guys, okay? We have an A, choose the most relevant and the lowest point first that we see in there, A, B, C, D, and E. And would you guys agree with me that it breaks out upwards, right? Or it tries to break out upwards, but it always breaks out regardless. So let's say we did a count on here for this one, okay guys? We're gonna count from down here. 1, 2, 3, 4, and 5. And then on the fifth one out, it breaks out upwards, okay? And normally what people will do is they will take a base range target, just like this. They'll take this range right here and they'll go very long over time, okay? And then they'll put it right here, and this is where their target will be long term, 95 cents. I mean, it reached it before 95, right? It reached it actually twice before. I'm sure it can reach it again. And then what they do is, now that they have that range right there, they'll take their long position tool, right? We'll target the same amount, and then we'll set a stop loss, you know, slightly below it here, okay? We set a stop loss slightly below it, and if you guys look here that I covered from my probability trading and how to manage risk, right? This is a risk to reward ratio of 5 to 1, and that's a really big number, guys. That's a huge number right now. So if it goes below this line here, that's your stop loss. Let's say it goes below 31 cents, right? And then you'll shoot for the same target as the base range right here. And that makes a lot of sense for a lot of people. So for example, if this one right here is about this wide, right? We take the base range, just drag it over there, and that's where our first target in the long run would be, okay? So this is called a falling bullish wedge. And bullish wedges are amazing patterns to play. They're one of my favorite patterns to play and the easiest ones to spot. And we're gonna look at a lot of these different ones in these videos. So for example, if you played here on the breakout, you wouldn't have even come close to your stop loss yet. In fact, the lowest that it went was actually 31 cents. You could have even allocated a smaller stop loss, or a bigger one rather, around say 29 cents. So until it hits 29 cents, you guys are not gonna close your position. Now this is actually shooting pretty long. So let's say you played $3,000 or $1,000 just as an example. you have a chance to lose 30%, okay? If it hits your stop loss, 30%. But on that $1,000 that you're playing, because you're using this target right up there, you also have a chance to gain 127%, okay? 127%. Put that into perspective. Your $1,000 will turn into $2,270 if you basically take this trade setup. Now, I'm no financial advisor, guys. Don't get me wrong. I'm just giving you guys an opinion, and I'm giving you ideas of how people will rationalize, or traders in general will rationalize targets, okay? Now, let's go over this pattern as well right here, which is just as important, okay? This pattern right here is just as important. So we're going to count basically 1, 2, 3, 4, like that, and then 5. And a lot of times what will happen is this right here. It's called a throw over, okay? It throws over outside of the pattern quickly, and then it comes down like that, right? So the reason why it gets thrown over is because they basically will create the impression, or the bears will create the impression that it's actually going to go higher, right? And a lot of people may not recognize these patterns. So they'll basically just keep buying it a little bit, right? Just to trap people into a bull trap. And then eventually they just dump the market, catalyzing the process. And then it falls down to about the same base range. So if we take a base range of, I don't know, something like that, we can also expect the target when it falls down to be about the same target as that. So this is called a rising bearish wedge. And it's really important to distinguish between them, right? So as you saw here, when it was constricting and squeezing into this tiny little point, because it was falling, and then I won't get into the market psychology behind the supply and demand of it, but that's basically what happens, right? The falling bullish wedge eventually breaks out of it, right? And people will take a stop loss slightly below it, and they'll target basically the same base range. Okay, now that this pattern has completed, right? It completed a while ago, you can say. I know in my video I extended to even over here. And yeah, you can do that as well, but we're gonna do it a different way this time, okay? Okay, so the way we're gonna do it is, before we had this resistance point drawn down to about right here, right, which formed the ABCDE correction. Now we're basically just getting an extended ABCDE correction, okay? So this is my take on it right here. Now that we were working in a different zone, now we're working in this zone. Would you guys agree with me? It's pretty hard to disagree with the fact that we all see this right here, right? Okay, now that we all see this right here, this is the zone that we're working in, right? Every time it comes down to over here, it's pretty much getting trapped. Maybe we can draw this a little bit better. Just a little bit better. Whether we draw it like this, right? So it's still angling downwards, as we've noticed, right? It's not exactly supporting it exactly horizontally. It is right over here, but the way I prefer to draw it is more like in a wedge shape right here, like this. This makes more sense to me, because sometimes when you look on a higher time frame, like for example right here, you only see wicks poking through it, right? So even a really good way to draw it is on a daily time frame right here, where you're only seeing the wicks poke through it, right? So you can draw, this would be considered, for example, a hard support, right? This would be like a hard support if you count all the wicks, but I prefer more of a softer support right here, because what it implies is the bears tried to push it down, but they just couldn't successfully push it down all the way, right? Or sorry, yeah, they couldn't push it down all the way, so the bulls successfully defended. Alrighty, sorry about that. I had to go I just had to step away for a second there. Okay, let's go to a different time frame still, 4 hours, okay? So what do we see going on here, guys, all right? We're gonna count a few things. I'm just gonna level this off a little bit nicer to make sure that it touches all the points that we want. Alrighty, let's count this, okay? So what we see now is basically an extended correction. We're gonna count this one A, gonna count this one B, all of this is C, that's D, and that's E, right? We can call it like that. But another thing that can be counted is we can probably end up counting like this. Let me show you. So if we start at this point as an extended correction, A, B, and this could be, all of this would be C right here basically. C, and then D, and then we can get one more that will squeeze into there. So if we actually look at it right now, we can see some massive rejection at this resistance point. Would you guys agree with me? I think so. It tries to break through it, but it just could not break through it right here. And it's getting, this range is getting tighter and tighter and tighter and tighter, right? And this is all in the 4-hour chart. So if we use this base range right here as our first target, so for example, if it was this big right there, right, and we took it out to the breakout area over here, we can use our long position. And if you guys aren't familiar with this, make sure you look at my previous videos where I explain it in lots of detail. So this is the trade setup that I'm probably going to end up taking very, very, very soon. And that's why I wanted to touch up on this specific video, because a breakout is going to happen soon, okay? If we counted it like this, we may actually get one more touch to the bottom over here. But let's say we ended up counting it like this instead, right? Where that's A, E is over here, D is up there, C is right here, and then B is right here. Then a breakout is actually, this could be the breakout already. Now, we don't exactly know which one is the proper way to count it because there's so many different fractal waves inside of these subwaves, right? But what we do know is that it is absolutely 100% squeezing into this area that I was highlighting, right? In this area right here, this green area. And a breakout could happen very, very soon. So let's look at some of the charts, okay? Oh, I forgot to talk about this part right here, sorry. This is a risk to reward ratio of 4.53, okay? And I wanna go over it in a little bit of detail. So if you play this position, what you would do is you would set your stop loss slightly below here. Now, what we have to understand as a trader is that we can't be right 100% of the time, right? It's inevitable that you guys are going to be wrong, that I'm going to be wrong, that we're wrong in general. But what we don't want to do, what we don't care about doing, is being right 100% of the time. What we care in the stock market about doing is being reactive rather than predictive, okay? And let me tell you the difference. If you try to predict something all the time, right? And then it goes against you, well, it's first of all demoralizing, and secondly, it can be very costly. But if you try to react to market circumstances as new data comes in, it's a lot better, guys. Because then this way, with information that comes in, it allows you to make decisions based on data coming in and lets you react, okay? So never get into the mindset of always trying to go one specific way, like whether you're biased long or biased short. What I try to do is I try to focus my attention on staying neutral entirely. And when you have neutrality, it allows you to make decisions much better based on information that comes in. So my analysis is not to show you guys whether you go long or whether you go short or whether I think it's going to go to this price or that price. My analysis is here to give you guys a gauge of the overall big pictures of the big situation, okay? Whether it goes long or whether it goes short. Now, what I see, and I'm gonna point out facts as I always point out facts all the time, is a falling wedge, which is bullish. What I see is a breakout that's gonna happen anytime soon, right? It could be today, it could be between November 13, which is about 5-6 days away. And what I see is that this is the base range of the wedge in here. And also, if I moved it over, we can use that as a target. And now, what I also see is I see a stop loss slightly below here because you wanna trade. In general, people want to take these types of setups. They're very, very profitable, guys. And since we've been talking about this video, it is down ticking so freaking hard right now, IOTA, and I love it because I've shorted it. So if you guys saw my Twitter there, I took some quick scalps already, and I also shorted from 383. So I'm half of a penny up on a few 10,000 coins, which really, really, really adds up, guys. So here, if you take this trade, right, we use the base range, and then we set a target for the same as the base range. And let's say you played a $1,000 position, you have a chance to lose 12.36%. which is $123, and you also have a chance to win almost double your money at 86%. So you can turn that $1,000 into literally 1,863. So what we do as a trader is we always take chances, right? We can never get into the mindset of taking a trade and just hoping and praying that it goes your way. It doesn't work like that at all. What we try to do is be more right than wrong, and we try to take high probability, low risk setups, right? And anytime you see a risk to reward setup of possibly 7-1, it's actually a really good trade to take because you have a massive chance to gain a really big amount. And don't get me wrong, I'm not encouraging you guys to take this trade of mine that I'm suggesting, but I'm saying I'm going to take it because we have to understand risk management, right? And we have to play the game like a casino. And when we trade like a casino, we are profitable over time by winning more than we lose, and also by taking high probability trade setups with high risk to reward ratios. And this one is a phenomenal trade. I personally would be pretty silly not to take it, right? I will be willing to risk 12% of my money to gain a possible 86% chance. In fact, that's a phenomenal 7-1 risk to reward ratio. So I've shorted it from over here already, and the reason why I did that was because I identified this resistance and this resistance here. What I would recommend doing to everybody, or everybody to do, is always identify your shapes, right? If it's a wedge shape, just draw it in. At least just draw it in once and then just delete it or something like that, okay? This way it gives you a mental image, right? It's kind of like this. If you meet someone for the first time, say their name. And the reason you say their name is because it helps your brain identify with that name and with that person more. And I used to be in retail sales when I was really younger, and that's something we were taught. And something that I always tell people with patterns is draw out the actual pattern, right? Just so it becomes engraved in your head. And then once you're done it, you can just delete it. I'm never gonna forget that bright green Hulk picture, okay, in my computer. So we have an A, B, C, D, and E, right? That could be right there. If it's not right, then we just move it over. This could be the E point. That could have been D, right? C could have been somewhere right there. And we're just basically getting extended corrections within a correction, okay? So it could be, you know, A, B, C, D, and E all the way down here. So what we're looking to do right now is we're looking for a confirmation of a breakout. And when you get confirmation of a breakout, guys, it will be so obvious to you. That's a one breakout, that's a second one, right? We want confirmation with volume, intense volume. That is massive volume. That's pretty good volume, right, for a breakout. That's a good volume as well. But what we're seeing right now, actually, guys, is we're seeing a decline in volume. Would you not agree with me? We are seeing a pretty big decline in volume, just in general, right? This one's getting lower. This one is absolutely getting lower as well, right? And we can use a volume divergence as an indicator for if it's going to go up or down. Usually volume tends to pick up as a breakout is going to happen. But here, do you guys think that it's going up or do you think it's going down? It's definitely going down, right? So because this is going down right here, it's very hard for me to believe that this is a breakout. So for example, if I deleted this right here, and this looks like it was rejected very severely, okay? Let's draw my resistance line a little bit better. If I drew my resistance line like that, this is a form of an inverted hammer candle. And let me explain the psychology behind that to you folks. The psychology behind these candles is that the bulls attempted to push it up like that, okay? They attempted to push it up. But what ends up happening is the bears have successfully regained control. And not only have they gained control, but they pushed it all the way back down to below this resistance line. And that resistance line is drawn pretty well, I'd say. If we look at it on a daily chart, it'll just most likely show a wick, right? Because let me show you guys one thing as well. If you have a green candle like this, okay, and then you also have a red candle, whoops, and the next one, you have a red candle like this side by side. What do you guys think on a higher time frame that this candle will look like? Well, this candle here, it goes up, right? And then it goes down like that, right? And because it goes up to down like that, what you end up seeing only is actually a wick from the start to where it ended. So you would actually only see a wick like that, okay? Where it overlaps, you don't see. So if it was like this, for example, what you would actually see is a candle like this. You would see just the green part right here. If it actually was like that, where this one was lower, okay, what you would actually see is a red candle, like this one right here. So that's why on a time frame such as this one right now, all that we're seeing is basically just a wick, right? And now what could end up happening is if we look at that candle right there, what I think will happen throughout the day is it will turn to a red candle. Right now we see green because it opened here and it looks like it's going to close there, right? And that's why it's green. But if it actually pushed all the way back down to where it opened and then came back down here, it would actually end up being red. And then what we would end up getting is basically a hammer candle, an inverted hammer, which is a very strong candle for a reversal. And the volume is being picked up already. What we do see from this specific candle is that it does try to break out of the resistance that we've identified right here. Tries really hard actually, okay? But it failed. And on the daily chart, we can even draw it better where notice that it's down ticking pretty hard already right now. So yeah. Okay, sorry about that. I keep having to step away from here because I'm gonna go, I manage my accounts over there. So where were we? I completely forgot. Sometimes I'm scatterbrained. Okay, I added even more to my short position, guys. I just don't see it going up there. So once again, on the daily chart, right, we see a massive inverted hammer. And let me show you guys what an inverted hammer is, okay? This is what an inverted hammer looks like, okay? So we see it on an uptrend. Some people call it a shooting star. Usually if we see it on an uptrend, it's actually a really nasty candle because it implies that the bulls have tried to push it up, but the bears have successfully defended and pushed it all the way back down. Which, when we think of market psychology like that, it really helps to give us an idea of what is going on in that precise moment. And these actually tell a massive story, guys. It tells a really big story of what's going on, right? We see the volume here, it's really little. So it's really hard for us to assume that this is in an uptrend right now. So we're down ticking pretty hard already, as we can see, right? I mean, it's not just gonna bounce off of there and go up, I don't believe. I really don't think so. If I just do a general wave count, right? I'm just getting 5 wave counts right here already with higher highs. 1, 2, 3, and that was maybe a 3-wave structure there. 4, 5, or I can break it down more in a lower time frame, I'm sure. So here, I'm just going to expect some sort of A, B, C correction down here, right? A, B, something like that. This might be right off of the resistance line, and then we go there, and then we'll probably end up dropping down to there. And then after we finish this correction, there's no doubt in my mind, guys, that a small breakout is going to occur again. Because when we look at this breakout that I mentioned before, right? When we were connecting these 2 points, right? When our main area that we were working with in this wedge was forming, what happened, guys? A massive breakout happened, right? And now that we're moving our area that we're working with to pretty much over here, a breakout will happen again, inevitably again, very soon. We usually get 3 points that touch, right? Here it was, here it was 3 points as well, right? 1, 2, 3, and then 2 major areas where it touches the bottom, and then it breaks out. Here, we're already getting the exact same thing, right? Let's look at this again together. We have 1, we have 2, and we just have the 3rd point there. So the next time it touches the bottom is where I'm going to go into a very, very long and hard position. I've actually been accumulating already since the last time I made this video on November 3rd. So right around here, I've been accumulating since 32, 33 long term in my portfolio, but I'm definitely going to be adding more to it, guys. I almost see no reason to not play this, right? I mean, don't get me wrong. There's a chance that it could drop down, right? So what we do is we first of all assume what we know. And what we know is that this is a falling bullish flag, right? Or sorry, falling bullish wedge. And because it is a bullish consolidation pattern, it almost makes no sense for us to actually play down, right? It makes almost no sense. For example, if you saw flag consolidation like this, for example, right, during an impulse trend up, right, and this is a bullish continuation pattern where it goes where it goes 1, 2, 3, 4, and 5, right? And then it breaks out afterwards like that. If we see this bullish flag continuation, which is a consolidation, it makes no sense for us to bet on it going down. Does that make sense? Do you know what I mean? So yeah, so I see a very bullish pattern here that's definitely going to break out soon. But we always have to be sure that there's not going to be some fundamental change that's gonna screw it up, right? So give me 1 second here. I'm gonna find my short position tool. So just in case it goes low again, right, guys? We take a stop loss, say right here. I'm gonna look for the next relevant point, right? The next relevant point would probably be somewhere around this area. So we'd shoot for a 20% profit, and we'll take our stop loss slightly above this particular line, right? So let's say, excuse me, I almost burped there. That was weird. Okay, so let's say it does go low. What we'd want to do is, of course, cut our position short, as long as we have massive volume confirmation. Massive volume confirmation like this, okay? Right? We have to have really big confirmation of volume, guys. I'm talking about this kind of volume, this kind of volume. I'm talking about on a downtrend, this kind of volume, okay, guys? That kind of volume, this kind of volume. So if you do see it go low, make sure that we are confirming the volume first of all, okay? And this, for example, we'll shoot for our next target of maybe right around here, okay? I mean, I can't even see it going lower than say 30, right? Because we're getting some pretty massive consolidation areas right there. So let's say we did shoot for right about there. We zoomed in a little bit. If it does go low, which I honestly cannot see it going low, we'd be playing a position to short it, and we could possibly gain 15%. We'll keep our stop loss at about 33 cents there. We'll shoot for a target of about 27 cents, right? So either way, we're prepared, guys, right? I can't predict the market. I can only give you guys my opinion on what I think is actually going on. And what I think is going on is that this is a bullish consolidation pattern. Not only that, this region right here was a really big buy region, right? I'm gonna circle it with the box here. So if it does somehow fall, right, this is a really big buy zone right here. Huge support, wouldn't we agree? So if it does fall down, that's why it's never fallen down to here once yet, okay, guys? Because the market in general has spoken, and what the market says is this was a good buy zone before going long before. This acted as a launch pad. That's why it never even touched this particular area. But you know, if it does break out of here and go down, which is a possibility due to some fundamental change, or maybe the market sentiment in general just turned very bearish. Maybe Bitcoin is tanking, right? And people are scared to put money into the altcoin market as well. So there's a lot of different factors that can be playing into here why it could go down. But so don't discount it for a second. But if it does go down there, in my opinion, it's not even worth it to short, because it's such a small price difference. I definitely wouldn't short this myself. I mean, I'm just giving an example of what you can do, right? So what I do see is a bullish continuation pattern. I do see to take a really long position for the day traders. We won't get into that. That's a really big topic. So for, say, a swing position or a day or a longer term hold, you can target, you know, even this next point right there. You can use this as the base range. So I'm just going to target, bring it in here. Use the same base range there. Drag it over to right over here, and then we'll put her right there, and then we'll put our stop loss right slightly in between the buy zone here and slightly underneath where the resistance is, and then we can target about 68%, or even we can go higher to 78% here, just to breach this point here. So that is how we could possibly play it out in the next few days, right? Let's look at it on the 5-minute time frame, guys, and see what's going on. We see a downtrend, right? We see a downtrend. I have a weird eye for things like this, even though it's on a 5-minute chart. What I see is a head and shoulders that formed right here, okay? A very nasty one, a very nasty one with lots of indecision. And it actually broke through it, if you guys saw. And coincidentally, the head and shoulder forms right at the moving average 55, and it breaks down, okay? What I see right now is this pattern going on within a small subwave of 1. I see 2, I see 3, and I see probably going to consolidate up here or something, and then it's going to come down more, and it's just going to keep making its way down. I really do believe that looking at all the indicators right now, okay guys, we look on the, for example, we look on the MACD, okay? Let's look at the MACD. We literally peaked here already, guys. We literally peaked here already, or sorry, the histogram, and we see it downticking, right? We see the histogram getting lower and lower. What the histogram does is, if you guys don't know, is it tells you the positive and the minus range that it's moving. So if it's moving up $1 at a time, right? $1 for every single tick, then this would move uniformly upwards. But right here, we see it moving down, right? Uniformly, down, uniformly. So each time it's moving down a specific price range. And then the RSI, of course, is, there's no doubt debating that it's bearishly diverging hard, guys. So if we would like to get into a bullish zone, for example, even on a 1-hour chart, okay, guys? On a 1-hour chart, we can't even break above 70. Let me show you guys what an uptrend is. This is an uptrend. It might not be an uptrend all the way, as in breaking out of the resistance, but that is nevertheless an uptrend with an 85 RSI, right? 85. So the RSI rule is, if it's considered a strong uptrend, it's going to break well over 85, even on a 1-hour chart, okay? That's what an uptrend is, when it's going up. This is what an uptrend is when there's a lot of pressure to go up, okay? Let's look at it over here as well. On this uptrend, you guys are going to see some massive RSI ranges here. Look at all this. And not only that, it doesn't even go below 40. So what we consider a bullish zone for RSI is in between 40 and up, okay guys? 40 and up. And if you guys notice on this impulse wave right here specifically, right? Do you guys really see it going low below 40? No, you definitely don't at all. It's staying well above 40. And for an RSI range to be considered bearish, you'd be looking at 60 and below, okay guys? 60 and below. Now you have to use trigger charts as well to confirm them, right? But look at this massive uptrend. That is called a strong impulse wave up, okay guys? This one here, what do you guys think of it? Nah, it's pretty crappy. It's actually really crappy right now when we look at that. Not only that, the MACD, despite it being a lagging indicator, the histogram is diverging very bearishly right now, okay? And I have no other reason to assume that this is on an uptrend, because the 1-hour RSI can't even break above 70. Do you guys want to see what the 4-hour RSI looks like? Okay, let me show you what a 4-hour RSI looks like on an uptrend right there. That is what a 4-hour RSI looks like. It doesn't even come down below 60. So on the 4-hour rule, I consider it for a strong uptrend is it doesn't even come below 60, guys, right? So when we compare it to here, I bet you this one didn't even get to 60 or 70. It got to 64. It's pretty lame attempt. Even though it's ticking upwards right now, notice how it's peaking right here, and the histogram is already bearishly diverging and coming down, okay? And we can use other charts as well as trigger charts. We look at the 30-minute chart right here and check that out right there. It's definitely diverging downwards. That's why I entered a short position. I can't help but think that it's going down, guys. We look at the 15-minute chart, okay? The 15-minute chart just moved below, right? So think of a hockey game, guys. Think of a hockey game, and in this hockey game, there's two teams, obviously, but one team is only being defensive, okay? And the other team, they keep attacking. They keep trying to score goals, right? But this other team, they're defending it successfully, right? They're defending it successfully. But the team that's only defending, they're not even trying to make any goals, guys, okay? They're not even trying to be offensive. Now we relate this to trading. If we saw both teams attacking each other, we would see candles like this. We would see candles with a long wick going through both sides, right? Now, where do you guys see more wicks on this 15-minute chart? I'd hardly say it was top. It was definitely on the bottom side, right? So what we see here are the bears constantly on the offense. they're on the offense, and it is shown by the long wicks always poking down, right? But here it also shows that the bulls are defending, right? Because we see these long wicks and then the bulls are rejecting it, so they're defending pretty well. But you have to ask yourself, are the bulls on the offense at all? Definitely not, because we don't see any wicks really poking upwards, right? They're not even trying right now. All that they're doing is successfully defending. And this candle right here, guys, the one that closes below the 55 EMA is the official point where the bulls finally said, screw it, we are not defending anymore, we have given up, please go below the 55 EMA. I hope that analogy helps, okay? I just made it up on the spots. I give myself a little bit of credit for making that one up there. Actually, I made it up in my last video. At the end of the video, I said to myself, oh, Philicon, that was a pretty good analogy that you just made there. And I added it to my book of analogies, okay? All right, so I got no reason, guys, to think that it's gonna go up anymore. There are so many red candles right now, right? But what I do have reason to believe is that we are playing in this particular wedge zone right here, okay? Would you guys agree with me that this is the play zone, okay? This is the ice rink. This is the basketball field, okay, guys? This is the court where the players and the athletes and the bulls and the bears are all fighting right now. And there's no debating that. If anyone says anything otherwise, I'd probably say, go get some glasses, you four-eyed person. I wear glasses, so and look how, notice how on the 4-hour chart, it's slightly just bouncing off of there right now, but we still look on the daily chart. That's a nasty candle that's forming, guys, of indecision. So, and there's no volume to confirm that's going up. So I do firmly believe that we are going to get squeezed to this area some more. We're going to get squeezed to this area some more. And some of the lowest points that we can use as a range is probably, you know, the lowest points where it could possibly break out downwards, for example, right? Notice how I mentioned in other videos, or earlier in this video, I mentioned that on the higher time frame, these don't even show, right? For example, on a higher time frame, you only see wicks. On a daily chart even, you only see the wicks, right? But we're going to count that into an area where it could possibly fall to, okay? So I'm just going to drag this over like this. So these are particular zones where it could still fall into, right? But this right here, the green one, is the main zone that it's playing in right now, just based on all the resistances and supports. I mean, one could even argue, and if we wanted to be very accurate, right, we could even, and instead of just counting the wicks and just, you know, not have too much work about defining or demarcating zones, I can just draw my area like this, for example, maybe, okay? And I can just extend my region to over here, which I personally don't like to do. Some people might like to do this, but I don't. But regardless, we don't have a descending triangle, guys. We have a wedge. And the reason we can confirm it's a wedge is because this one slightly slopes, right? But the better way to do it, of course, is to draw with just a few wicks poking through it. I think that's an acceptable way. Wouldn't you guys agree? So we're down ticking pretty hard right now. There's not a lot of volume to confirm it. So we can't say we're down ticking really hard, actually. I stand corrected, right? But what we can say is that there's no volume for the bulls to try and make an attempt. Would you guys agree with that? So if the bulls are not trying, but the bears are not trying to push it down, there could be a balance, right? Do you guys know what I mean? But because the bears are, they're attacking a little bit more, I would say right now, absolutely. They're definitely making more of the plays by pushing it down, and it just shows by all these wicks coming down. Yes, it does show that the bears are defending, but it also shows that the bulls are not even trying to push it up past that point. Now, what could happen, guys, is anything within this region right here, okay? So don't get me wrong, a breakout could occur any moment. This is the key one to look out for right here, this moving average, okay? On the 2-hour chart, for example, let's see if it's going to bounce off of it. On the 1-hour chart, we can see it's getting close to it. On the 30-minute chart, we can see that it's bouncing off of it already, okay? So that's important to make note of, these bounces off the moving averages, especially the 55 and the 100. I don't have the 100 on here because I'm a day trader, right? So the 100 moving average is so irrelevant to me, but I should probably start incorporating it there soon. So look at this candle, for example, okay, guys? This one right here. Okay, look at this volume bar and look at the candle that coincides with it. Now that, guys, that right there is some big volume on a 30-minute chart to dump, okay? So guys, I will finish my video here. I will say one more time that this is kind of a falling wedge and we sometimes have to take the chances. That is a really good high probability setup to take right here, right? But you guys have to understand that there's always a risk involved. It is not about whether I am wrong or right, okay guys? It is not about whether I am wrong or right. I've taken a look at both sides of the scenario, which is if it falls down, it could fall down to this buy zone here between 25 cents and 30 cents. When I've also talked about the risk and the reward for that. And I'm also suggesting that this is a really good opportunity to go long and make some pretty substantial gains, because a breakout is very likely to occur on the upside to here, and you can get some really crazy risk to rewards, right? So this one, for example, just taking the base range one more time in here, anywhere from, say, we'll take this one right here. I mean, that's a possible gain of 77%, right? And then we just set our stop loss slightly below it here in case it does go long and we cut our losses. But what you could even do instead, right? Another way to manage your risk is you accumulate very slowly, and you're still going to be very long biased because you see this massive buy zone right here. And we call this a buy zone because of this, guys, because of this particular area that it could fall down to, okay? So you can buy some. What I'm going to do probably is I'm going to start accumulating slowly in here because I want to average out my price. And then if it falls down here, I'm not going to close my position, to be honest. The small swings long term don't bother me. In fact, if it falls down to this region, I'm going to add more to it. I'm going to add even more to my position to hold long term because it's only a quarter, guys. Imagine if I gave you a quarter, okay, guys? And I said to you, hey, for every quarter you put in a few months, you have a chance to turn it to $1 or to 50 cents, right? Imagine if you had children, for example, and then you gave them a quarter, and then they, you put in their piggy bank, for example, and that quarter could turn into 50 cents or $1 one day. I mean, that's a pretty, and there's a chance that it may not happen, but even if there was a chance and you're gonna save your money anyways, why not? Why not do it? So am I gonna take this trade setup? 100% I'm going to take it, guys. If it goes down lower, what am I going to do? I'm not going to close my position because I'm holding it long term. I'm investing in this coin, right? Not day trading it. So that's really different. So I'm not too concerned about day trading setups. So other than that, guys, I'm going to conclude the video here. I hope that gave you a really good idea of where we're standing right now with IOTA. I want to thank everybody for all the love and the support for the 1,000 subscribers that I have on YouTube. And I also want you guys to know that I'm just here to help people with what I've learned, right? And I don't like any negativity because, there's a lot of people. Oh my God, it's now taking a 377 right now. I'll be right back. That right there was an example of what not to do, which is let your emotions take over you, okay, guys? So take that lesson the mistake that I just made for you guys to learn, which is to not get too excited sometimes and to remain calm and collected, okay, guys? I just got excited because my short position closed because I shorted from like 382, 83 or something, and I closed it at 377 because it hit my magic number. So just to give you an example of how much profit there can be made, I played about 25,000 coins, right? So 25,000 coins times, it was a small position to me, so it was about $15,000 on 25,000 coins there. If I made half of a penny on each one, I just made $125. Okay, I'll take it. Not too disappointed. So what I was saying was I want to thank you guys for all the love and the support that you've given me and for getting to 1,000 subscribers, right? And I want to make sure that we keep this a very positive environment always, okay, guys? We want to make sure that we leave all the negativity and all the crap outside, okay? And some people love to comment. Like there's one guy yesterday I'll tell you a story about. He commented and he was saying, I have a PhD and blah 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 blah, and what you're saying is so wrong, blah blah blah. Seems like you don't know anything at all that you're talking about, blah blah blah, right? So he's basically bragging about his credibility, first of all, in an academic setting, and secondly, he's calling out someone, right? And all I'm thinking to myself is, so I'm a guy that's dedicating hours of my time a day to share what I know to people and create good content, right? Whether I'm right or wrong, at least I'm trying. And he's just a pretentious, arrogant guy that went to school for too long and doesn't know social etiquette or how to be polite. Gotcha! So I immediately remove all those people from my channel, you know, because what's the point? That's awesome that you guys have a PhD, you know? You might not be a really good person though, and I just want to help people down the road, and that's why I'm making these videos. Whether I'm right or whether I'm wrong, what matters is I want to share with people what I know, right, guys? And I think I'm at the point where I'm done, you know, I'm done trading heavily, put it that way. I've had my time in the trading world. I've done very well for myself, and I just want to share and teach what I know now. So if you guys appreciate this video, you know, make sure you guys follow me. Make sure you guys subscribe to me. You guys are more than welcome to leave a tip for Luna, the dog that howls at the beginning of every video. She's got her own little piggy bank on bitfinex as well. You guys are welcome to donate to that in the addresses below. Luna sends her love as well. She's sleeping right behind me on her little ottoman that I got her. So have yourselves a great day. And if you do enter this trade, guys, good luck, okay? Good luck. Make sure you manage your position very wisely. If it goes the other way, make sure you're cutting your losses incredibly fast. Unless you truly believe it'll bounce from here, which I do believe. I will even add more. You know, if I buy 10, 20,000 here, if I truly believe it's going to bounce from here and the volume picks up, heck, let's add another 20,000 coins on there and just play this guy really long term. So have yourselves a great day, guys. Have yourselves a great Tuesday and take care.